Welcome back to our channel, where we dissect the intricate movements of the precious metals market. Today, we're diving deep into the silver market as we navigate January 2026. This month has been pivotal, marked by significant activity at the COMEX, crucial macroeconomic shifts, and fascinating technical patterns that are shaping the future price of silver. Let's start with the hard data. The COMEX delivery report. January is traditionally a minor delivery month for silver, but this year it's telling a major story. We've seen a remarkable surge in delivery volumes, far exceeding the typical figures for a non-active month. This isn't just a minor blip on the radar, it's a significant signal. Over the past few days, we've witnessed a consistent pattern of entities standing for delivery, absorbing a substantial number of contracts. This indicates a strong physical demand for silver, moving it from paper contracts into tangible assets. The open interest for the January contract, while smaller than major months like March or May, showed unusual resilience leading up to First Notice Day. Instead of the typical sharp drop-off, a considerable portion of contracts remained open, signaling a clear intent to take delivery rather than rolling over or closing out positions. This speaks volumes about the market's perception of physical scarcity. Participants are not just speculating on price, they're actively securing the metal itself. This trend of taking physical delivery is a powerful undercurrent that suggests a growing distrust in paper markets and a flight to the safety of hard assets. Now, let's connect this to the broader macroeconomic landscape, because the silver market doesn't exist in a vacuum. The main event this month was, without a doubt, the Federal Open Market Committee, or FOMC, meeting. The financial world was holding its breath, and the Fed delivered a statement that has sent ripples across all asset classes. They decided to maintain the current interest rate, holding it steady for now. However, the real story was in the forward guidance and the language used by the Fed chair. The tone was decidedly more dovish than anticipated. While they didn't explicitly announce a pivot, the commentary hinted strongly at a softening stance, acknowledging cooling inflation data and growing concerns about economic headwinds. This subtle shift is incredibly bullish for precious metals. A dovish Fed implies that the era of aggressive rate hikes is over, and the next move is likely a cut. Lower interest rates decrease the opportunity cost of holding non-yielding assets like silver and gold, making them more attractive to investors. Furthermore, this dovish tilt has put significant pressure on the US dollar. The dollar index, which measures the greenback against a basket of other major currencies, has seen a notable decline following the FOMC announcement. A weaker dollar is almost always a tailwind for silver. Since silver is priced in dollars globally, a weaker dollar makes it cheaper for buyers using other currencies, which naturally boosts demand. This inverse relationship between the dollar and silver is a fundamental principle, and right now, it's firing on all cylinders. The combination of a steady-handed Fed and a weakening dollar creates a perfect storm for a potential rally in silver prices. The macroeconomic environment has shifted from a headwind to a powerful tailwind, providing fundamental support for the bullish case we're seeing play out. With the physical demand and macroeconomic winds at our back, let's turn to the charts and see what the technicals are telling us. The price action in silver has been incredibly constructive. After a period of consolidation, we've seen a decisive breakout above a key resistance level. For weeks, silver struggled to overcome the psychological barrier around the $26 mark. This level had been tested multiple times, acting as a ceiling for any upward momentum. However, in the wake of the FOMC meeting, we saw a powerful surge in volume that pushed the price not just to this level, but cleanly through it. This breakout is significant because it transforms that old resistance into new support. We've since seen the price retest this level from above, and it has held firm, confirming the breakout's validity. This is a classic technical pattern that often precedes a more sustained move higher. Looking at the moving averages, the picture becomes even clearer. The 50-day moving average has recently crossed above the 200-day moving average, a pattern known as a golden cross. While not a foolproof indicator, the golden cross is widely recognized by traders as a signal of a potential long-term bullish trend. It suggests that short-term momentum is now leading the long-term trend in a positive direction. This technical signal, combined with a breakout above key resistance, adds a significant layer of confirmation to the bullish thesis. Furthermore, momentum indicators like the Relative Strength Index, or RSI, are showing strength but are not yet in overbought territory. This suggests that there is still plenty of room for the price to run before it becomes extended. The technical setup is aligning perfectly with the fundamental drivers we've already discussed. So, what does this all mean for the silver market moving forward? Let's put the pieces together. We have unprecedented physical demand demonstrated by the COMEX delivery numbers. We have a major macroeconomic shift with a newly dovish Fed and a weakening US dollar. And we have a powerful technical breakout confirmed by multiple indicators. This trifecta of bullish factors creates a compelling case for higher silver prices in the coming weeks and months. The increased physical offtake from COMEX is draining registered inventories, which are already at multi-year lows. If this trend continues, it could lead to a genuine supply squeeze, where the available physical silver is insufficient to meet delivery demands. This is the scenario that many silver bulls have been anticipating for years, and the data from January 2026 suggests we are closer than ever. The market is transitioning from a paper-driven speculative environment to one dominated by physical fundamentals. Looking ahead, the next key resistance level to watch is the $30 mark. This is a major psychological and historical level. A break above $30 would be a monumental event, likely triggering a new wave of buying from investors and momentum traders who have been waiting on the sidelines. Given the current momentum, a test of this level seems increasingly likely. Of course, no market moves in a straight line. We should expect pullbacks and consolidations along the way. These are healthy and necessary for a sustainable uptrend. For investors, these dips could represent buying opportunities, allowing for entry or accumulation at more favorable prices. The support level to watch on any pullback is the former resistance around $26. As long as the price holds above this level, the bullish structure remains firmly intact. In conclusion, January 2026 has been a game-changing month for the silver market. The confluence of strong physical demand, a favorable macroeconomic backdrop, and a bullish technical posture has set the stage for a potentially explosive move higher. The signals are clear. From the vaults of the COMEX to the halls of the Federal Reserve, the dynamics are shifting in silver's favor. We are witnessing a fundamental repricing of this critical monetary and industrial metal. The sleepy silver market seems to be waking up, and the path of least resistance appears to be to the upside. As always, it is crucial to do your own research and manage your risk, but the evidence we reviewed today presents a very strong case for the silver bulls. We will continue to monitor these developments closely and keep you updated on this exciting story as it unfolds. Thank you for joining us for this in-depth analysis of the silver market. If you found this information valuable, please consider liking this video and subscribing to our channel for more updates on the precious metals and financial markets. Hit the notification bell so you don't miss our next video. We appreciate you watching.